Good evening. I think I've only got 7 minutes, so there are lots of different ways to look at this question of achieving strategic advantage through sustainability. And I think I sort of stand here in some ways to talk about at least 2, if not 3 of them. One is my own company, because this dates back to 2003, when I came to the conclusion that the way we produce energy, the way we distribute energy, can't be continued in the same form. So that there was a discontinuity coming, and I thought through how could I possibly play that trend. And I think that's the first lesson, is that it doesn't necessarily have to be a direct line from A to B, where you say energy is changing, so I need to get in the energy business. Many of you here tonight are not in the energy business, you're not in the sustainability business at all, but you can find ways of playing those trends, and that's something that I think that as New Energy Finance, now part of Bloomberg, I think we did quite well. And the second, though, is an easy piece, and I'll go through some charts that I've got on the energy industry itself. That is something that we analyze all the time, and I can explain perhaps a little bit about this transformation, which I was lucky enough to see coming back in 2003 or 4, and I think is absolutely on track here today. And what we're talking about is nothing less than a complete transformation of the energy industry, the energy sector. It is going from centralized, dirty, dumb, insecure, to decentralized, smart, distributed, and much more secure, much cleaner. And that trend is happening. There's lots of noise in the system, but I'll try and persuade you that that is a trend that's happening. And then if I have time at the end, just say a couple of words on the broader question of sustainability. So this chart shows how much money is invested in clean energy going back to 2004, when I first started to track it. And we had a couple of people in a garage, and here we've got 200 people, including 35 people in South Africa, entering data into data sets. And you can see this enormous surge of investment, which then goes flat during the recession year, or the crisis year, 2009, and has then taken off, and we've just published these results. 30% increase in investment activity in clean energy in 2010 over 2009. So a 5-fold increase in investment in this space over that 6-year period, a doubling since 2006, really quite extraordinary. And to put this in context, if we are to see emissions, greenhouse gas emissions from clean energy peaking in 2020 and then starting to come down, that number needs to be double. We need to see $500 billion per year invested worldwide. This is renewable energy, energy efficiency, smart grid, and so on. It doesn't include nuclear, although we track that as well. So if we are halfway to where we need to be. So it's very easy to be pessimistic, because what we've got here is investment in a lot of earlier stage technologies and business models, but they are scaling so rapidly, and we'll see the effect of that in a minute. What's been very interesting, we've also been tracking the valuations of clean energy companies, and particularly since the crash. You can see the darkest line there is the NEX. It's an index that we publish. And you can see this enormous sort of exuberance. We had here, that peak there is George W. Bush saying we're addicted to oil, and everybody got excited in ethanol, and they got unexcited. Then we had another ramp up. We had the Inconvenient Truth and Kyoto, and 2007, remember Leonardo DiCaprio and all that stuff. And then, of course, that was the index went to 450 from a baseline of 100 back in 2003. And I'm proud to say we were saying at the time that we thought that that was probably, we don't forecast share price. We never say overvalue, but we use words like irrational exuberance and blah, blah, blah. And sure enough, you see it crash. So I don't think we created the financial crash, but certainly the sector suffered quite badly. Now, interestingly, since then, it hasn't really recovered. This is the NEX since the beginning of 2010, and these are other major indices. So you can see that the clean energy sector, despite this 30% increase in investment activity, valuations have been fairly low. So this is a sort of strange thing that's going on, that within the industry there's a lot of money flowing, but, if you like, the valuation's staying down. And I would argue the reason for that is that the mainstream simply doesn't understand how profound the changes are in the energy space. And parts of the energy industry don't realize that either. The reasons why they're sort of down on the sector, you had Copenhagen, Cancun sort of marginally better than Copenhagen, some progress, extreme lack of clarity over what actually is going to come out of those. But actually, these things only really affect what happens if you are outside OECD countries, outside China, and outside Brazil. So this whole process of the international negotiations is now all about how do you get investment in countries like Mexico, Uruguay, Sub-Saharan Africa, Southeast Asia. To be quite honest, that is the tail that ends up wagging the climate dog. And the investment figures we've seen are all happening irrespective of that process. We've seen a cold winter. This is actually a real picture, it's not Photoshop. And I don't know if you can see there, the black line is skepticism about climate change. And so the mainstream now thinks climate change is off the boil, has gone away, didn't exist, et cetera, et cetera. The closer people are to the issues, the more they realize that's not the case. On the plus side, this is stimulus spending. About $200 billion was targeted at clean energy as part of the stimulus programs launched around the world in response to the crisis. And you can see relatively little of that flowed in 2009, got better in 2010, and so on. So there's a number of things that are helping the sector. This is the interest rates starting to come down for wind farms, so we're starting to see money flowing as a result of that. But what I want to do is if I can show you the real reason why there's a profound change in the clean energy space is it's all to do with experience curves. It's all to do with the equivalent of Moore's law in energy. And you can see here the price of solar modules coming down. And solar is now competitive with retail electricity in Hawaii, in southern Italy, in parts of the southwest US, and that trend is going to continue going forwards. This is solar silicon. You can see a huge bulge in price. It's come back down. Solar is becoming cheaper and cheaper. Wind turbines, the same thing. We saw prices going up because commodity prices went up, because demand increased. We're now seeing wind turbine prices coming down. And we've just published the most recent version of our index, which shows that energy from wind is now at the exact same level as new coal. And so this is a transformation that is completely profound throughout the energy space, and we'll see the implications as more scale, more investment drives more scale in energy. We will see those trends continue to play out. We're seeing developments around electric vehicles being launched. That will drive the same sorts of experience curves in batteries. We're seeing the same trends even in the biofuels space, which is so out of favor. So there's nothing short of this. The conclusion that I drew when I started the company, that there's a transformation which will cost billions and it will take, or trillions, and it will take years, is very much playing out, I would say, almost according to schedule. I wanted to make a final point, if I've got time, on the more general sustainability question. So that's the energy space. Anybody in that space will know that these are the trends to be the right side of. But I find myself slightly in a strange situation standing up here as part of Green Anything talking about sustainability, because all of this is actually much more about resource efficiency. It's much more about, it's not driven by a green agenda. The energy industry will switch because this stuff is cheaper than the alternatives, particularly if you price in externalities. And I think if you go through the rest of this evening and replace the words sustainable and green with resource efficient, then you'll start to see a lot more doors opening up, just ways of doing things, ways of making money, and also ways of persuading that awful CFO that you spoke about at the beginning. Thank you very much.